I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Chris Larsen. Chris is the founder and principal of Next Level Income. He's been investing and managing real estate for over 20 years, started out as a college student. So Chris, let me first start by saying thank you so much for coming on the show today. I appreciate you taking the time.
Yeah, no, absolutely. It's my pleasure.
Awesome. Well, why don't we just start? Let's let you kind of tell people your story, tell us your background. I know I mentioned there that you started in college, so it's clearly I'm sure you've got a lot of experience to share with our listeners. So please start wherever you like, but let us hear a bit about your background.
Yeah, no, thank you, Jason. I appreciate that. And yeah, actually, I was rooming with two veterinary students at the time when I bought that first property, as we were talking about a little bit before the show. Yeah, I went to Virginia Tech. I went to school for engineering, but my true passion at the time was racing bicycles, and so I was riding my bike as much as I could, going to class in between training, and that was really my passion. That's what I wanted to do, and what my focus was. My plan was to get my degree, get a decent degree. Figured engineering was something that could give me a good base, and then I was going to go pro, and then I was going to figure out what I wanted to do after that. And unfortunately, during that process, between my freshman and my sophomore year of college, my best friend, my roommate, my training partner passed away, and it kind of gave me pause. It made me think about what I was doing in life. It made me think about my why, and it made me realize that I was meant to do more, and I didn't want to have any regrets. I figured that kind of riding around in a circle on a bike wasn't really what I was meant to do. And part of the other problem or challenge at that time was there were a lot of drugs in the sport. Look, there's a lot of issues with a lot of sports that are out there. And whether you're talking about business, you're talking about cycling, you're talking about even high school sports now. There's people that are going to do things. We've seen the college cheating scandal here. Sure. In the past year, people are going to do things, right? They're going to do things that they're not supposed to be. But that took the wind out of my sails. And I had this revelation where I realized that, listen, I don't want to have any regrets. I want to be able to do what I want when I want to do it with my life. And whether we like to admit it or talk about it, which I'm sure if you're listening here today, you kind of get it already, but you need money to do that. You need money to be able to achieve your true potential, your full potential in this life in a lot of cases. So I read over 250 books on money, investing, stock market, business, real estate, all sorts of different things. And after day trading for about a year and doing quite well at times, I realized that the stress wasn't really how I wanted to spend my life. That wasn't really truly investing. I settled on real estate, bought that first property at 21, and really started growing a single family portfolio that I managed myself for the next 10 plus years, almost 15 years. And then about 10 years ago, we started selling off those properties and ultimately invested everything in commercial real estate, which is what we focus on now.
Awesome. Well, yeah, we could probably do a whole podcast on what people will do in I guess maybe not just sporting, but to get ahead. Essentially, what people will do to get ahead in whether there are long-term repercussions or not. That's an entirely different topic for another day, maybe. But regardless, I think starting your investing journey in college is a lot of people don't do that. They don't know what they want to do at that point. They don't necessarily have the wherewithal to even consider that they're going to look at this from a bigger picture, right? They're like you said, you're cycling, you're trying to get a job, although engineering is pretty high achieving just to get a job. So what outside of that sort of tragedy in your life, what things sort of sent you in that direction? I don't imagine losing your friend. I'm sorry for that, by the way, but I don't imagine that was, sort of the one impetus to say, okay, now I'm going to shift into investing. What other things kind of hit you around that time?
Yeah, so that's a good question. And look, by the way, I talk about this whole story in my book, which you can get at our website, nextlevelincome.com. If you put your address in, I'll send you a copy. But yeah, there was a confluence of events, Jason. And sometimes it's, it's kind of like those underlying events. And then what is that thing that kind of pushes you over the edge? So for me, that was the death of my friend. But what was kind of building up to that point was that I was racing my bike. Cyclist, even if you go pro, you don't make a lot of money.
Mhm.
So it's like, okay, I want to race my bike, but I don't want to be a pauper. So I always had kind of this entrepreneurial streak. I mowed lawns. I did kind of like yard service. I don't know if you can hear my security system here in the background, but yeah, I had a paper route, which at the time I had a yellow lab. Now I have a Vizsla, who some of you might have heard in the background here. But yeah, my lab would run around with me on my paper route in the afternoons after school. I emptied the trash for our local community beach, which I'll tell you what, if you want to be humbled, empty trash in the summer after people have thrown diapers and meat that's covered in maggots, and it really
Yeah.
teaches you, what you do and don't want to do in life. I
Right.
also worked for my stepfather. My father passed away when I was young, and my stepfather was a contractor. And I'd be shoveling shingles in July on a hot roof. I'd be laying floor and digging ditches and all kinds of stuff. So I realized that that wasn't really the life for me. My parents also had some real estate. They had a few properties that they managed. So I knew that that was an option that was out there. And I also had a family friend that introduced me to investing. He gave me a money magazine, and it had this picture of a curve, a compounding growth curve of what would happen if you invested in the stock market. And it was kind of like magic to me at the time. I looked at it and I was like, wow, this is crazy. Like it's just math. And I was always pretty good at math. So I just looked at that and I thought, okay, I got to figure out how to do this. And as you just started down that path and started reading these different articles and these different stories, I'm in the Barnes and Noble one day, and this guy turns to me and he said, "Hey, are you looking for a book to read?" I was in the business and finance section. He handed me Rich Dad Poor Dad, right? And I was very young at the time. I was probably 20, and it just come out. It had just come out, and he worked for a multi-level marketing company, which Robert Kiyosaki did a really good job marketing to multi-level marketing companies with his book. And read that book, and I was like, oh, I get it. Like, you want to be a business owner, you want to be an investor. So in my mind, Jason, I said, I don't want to be a professional. I want to be an investor. And now that I'm no longer in the medical device industry, where I spent 18 years, which is how I kind of created capital to invest, people ask me, and they say, well, Chris, when did you decide to invest in real estate? Or when did you decide to do real estate instead of being in the medical device industry? And the answer I always tell them is that, well, the only reason I got into the medical device industry was because I needed capital to continue down the
Right.
investing path.
Right. That's
Yeah.
a great point. And it comes up a lot, and it's something that, there's a lot of things in the real estate world, sayings that people will put out there, or even just, I don't know if it's even a saying, but they're like, oh yeah, you can invest with no money, right? That you don't need money to
Yep.
invest. And I think that's extremely misleading. Need you need money to invest. Now you can invest your time, you can invest some sweat equity in a lot of situations,
Yep.
but you're going to need someone with money. So it's kind of, if you want to be
Yep.
involved, you're going to have a way of making money, creating that capital for investment. And so, in your instance, you used medical sales, and a lot of people do that. Like, I'm going to go into sales or whatever it is. They're going to go into something that has, it's generally a high paying job. And oftentimes sales are commission based. And so you have the ability to push yourself as much as you want or as little as you want
Yep.
for the results that you want. So it
Right.
really is a great plan. And the fact that you sort of had that awareness to come up with that plan at a young age, because the other really, really important thing I think investing, and you touched on it, is just time, right? So
Absolutely. Yeah.
starting at 20 versus starting at 40, if you want to
It's a
reach
get
the
rich slow
same
game.
place at 50 or 60, you're going to
Yeah.
have to be playing catch up the whole time if you started at
Yeah.
40, where you can go really pretty easy if you start early. So I, I love that you
Absolutely.
said that. And it's something that I love to, kind of emphasize to young people, like,
Yeah.
do something, just get a little bit invested, like start thinking about it at an early
Yeah.
age, and it'll make your life a lot easier, kind of here in your 30s and your 40s.
Yeah. No, I think that's a great point. And you touched on something, Jason. And I actually put a framework together around this, which I can share with the audience here a little bit later before we end up. But I was speaking a couple of weeks ago at a local real estate meeting, and I got kind of some pushback when I said this. But I said, look, if you're not already, you need to become accredited. You need to make more money. And the three tenets of the next level income strategy are make more money, keep more money, and grow your money, which is how we kind of put together the framework in the course that we have now. But I said to this audience member, I said, if you're not already making over $200,000, you have to figure it out. And she just retired from teaching. Okay. She went into as a real estate agent, and her eyes, she like almost fell back like out of her seat. And she's like, I can't even like imagine that. And I said, well, you have to figure out how to get there, because, the fact of the matter is, if you don't have money to invest, you have to invest your time, or like you said, Jason, you have to find somebody to partner with. It's usually a lot easier to come up with a skill or increase your earnings in your profession, or have a side business, or a combination of all of the above, where you create more capital, where you become that. Because look, if you're making $75,000 a year, you're paying taxes, and you're trying to live off $50,000 and supporting a family, it's a lot more challenging to invest $100,000 in that scenario, because you don't have it, than if you're making $200,000 a year. So I've found, for me, for most people, that are probably listening, that are professionals, that are working, it's usually easier to grab that low-hanging fruit and increase the earnings that you have, so that you can invest and then optimize your after-tax income, than going and trying to buy real estate, no money down, which certainly is possible. It certainly is, but it's not really that scalable. And that's we can talk lots about that.
Yeah, no, it's a great point. Not to mention, so yes, and I can understand why she would push back, right? Because I don't want to tell people that don't make $200,000 a year that they can't or shouldn't invest, right? They should invest.
Yeah.
But the point being, if you want to sort of add fuel to that fire, you've got to figure out a way to make more money. Eventually, the idea is that those investments that you make, become the more money. But in the beginning, you've got to figure out a way to generate more income. The other thing is, if you become accredited, there are more opportunities. Whether it's fair or not, there are more opportunities. It's a rule from the SEC that I hate. I think it's very misguided. You're able to lose all your money if you're not accredited in the stock market. You can do that tomorrow, but if you want to invest in a safer, more predictable vehicle, now you've got to jump through all these hoops to be able to do it. So
I agree with you on that.
A little bit of a soapbox thing, but it really doesn't make sense to me. I show investors these PPMs and stuff that we have to give them for our investment opportunities, and it's daunting. And yet you can download Robinhood on your phone now, put a whole bunch of money into it, and put it on whatever you want, and potentially lose it. And so it just doesn't make sense to me. Right, exactly. That's the easy example there. But yeah, it just doesn't make sense to me that's where the rules are. Regardless, not important to harp on that now, but I think the point being a really good one that you said, like, get accredited, which ultimately 200,000 if you're single, 300,000 a year if you're a married couple, or $1 million in net worth, not including your primary residence. So important for people to know just what that means, because I've met plenty of investors that if I ask them if they're accredited, they don't know, and I probably didn't know 5 years ago what that meant either. So even though I technically was, I didn't know what it meant. So it's one of those things that I think isn't well defined either. So when so you're speaking at an event, you're telling them, and what actionable advice would you give to that woman that was sort of thrown back as what do I do? Yeah. What can I do to increase that income and get to that next level?
Yeah, no, absolutely. Well, first off, I gave her a free copy of my coaching course. So I gave her that to help her on her way. But let's break it down further. Okay. So first off, she's a realtor. She's a real estate agent, right? So, I guess her first problem in my mind, Jason, I spoke with her for quite a while afterward, is that she wasn't surrounded with the right people. You need to be in a group of people that knows what is possible and knows how it can become possible. Like if you want to get to that point, or at least they're supportive, right? If you have friction, if you have resistance to that, if your friends are telling you, your family's telling you, oh no, you can't, like, you're not gonna be able to do that. Like, don't listen to that. You're gonna lose all your money. This, and then you got to get new friends. You got to get new support system that you're around. Maybe that means hiring a coach. Maybe that means going, like this woman was going to this meetup, right? Perfect. I said, listen, all the support, all the money you need is in this room. Okay. That was perfect. So she's already doing that. That step is correct. Okay. The second thing that a person in that circumstance needs to do is she probably needs to get coaching in how to grow her real estate business as quickly as possible. Because if she's sitting there basically arguing with me that this isn't a reasonable amount of money as a real estate agent, well, I used to be a licensed real estate agent. That is certainly a very reasonable amount of money to make as a real estate agent. And by the way, her husband still works too. So she doesn't have to just make 200 grand by herself. Her husband could make up part of the difference if they count on that 300,000 as a couple for the accreditation process. So that's the other thing. And then just like you, Jason, you went to school for a long time, right? To get to the point where you were making a healthy income in a very specialized area. Well, it took me 5 years of working before I was working and making enough money to become accredited in my profession. So I went to grad school, and then I got out and I worked for a couple of years, kind of entry level. And then I hit a point where I was like, okay, I'm in the role that I want to be in. It took me about 5 years total to get to the point where I could make over $200,000 a year. Now, granted, this was 10 years ago, but here's the cool thing. The SEC, I agree with what you said earlier, but they still haven't raised that limit from what it was 20 years ago when I first learned about it. So earning $200,000 today versus when I first learned about it, it's more like 125,000 probably, or 150,000, which is way more reasonable than it was. So it's definitely more achievable now than it was 20 years ago. So then that brings me to my next point. You can do both. So while I was trying to get to the point where I was being to be accredited, I was going out and buying single family properties that I could afford with the money I had at the time. And I was managing them while I was learning about some of these syndications, these other strategies that were out there. Now, I would argue it took me too long to do that because I had my head down. I was growing my business, my profession, my family. We'd moved to Asheville. So I was doing some other stuff, but you can do that. And then here's the other thing. When we did start investing, Jason, yeah, we could save $50,000 here, maybe $100,000 over a year, but we wanted to be able to invest more faster. My wife went back to work as an architect. The first year she went back to work after having our 2 kids, after paying taxes and childcare, we lost $11,000 with her working. We lost $11,000. It was crazy. And I was like, I'm sitting here having a conversation with my wife who went to school longer than I did about how it doesn't make financial sense for her to work. So we decided, okay, we got to find a better way. She started her own practice, and we started building spec homes at the time to create more capital to invest. So again, we were learning. I was growing my own income, and we were investing with the capital that we were growing from our side businesses. So we were doing multiple things all at once. And that was the advice I gave this woman was, here's what you need to do, but don't wait 5 years to say, oh, I'm going to learn how to invest. Start to learn how to invest. Look at what your options are. Hey, you're a realtor. If you get some off-market deals that are sweet, find a partner with money. Like you were saying earlier, you can go and you can buy this deal together. You can bring them an off-market deal potentially. You both make money. There's a lot of different ways that you can do it, but you don't have to just do one thing. You can do a bunch of things all at once.
Yeah, absolutely. And I guess I would add one thing to that. What she needs to do, maybe first of all, is believe that it's achievable, right? Is get her
correct. Yeah, that was the mindset
right.
thing.
Yeah, it's just like,
that's exactly right. To underscore that.
If she's coming to the meetup and saying, oh no, that's not possible, well, glad you're at the meetup, because that's the first thing that has to shift. You have to believe, and believe, set your sights at, okay, well, I'm going to make 400,000, and if you fail, you failed enough to be accredited and still achieve all these things. So yeah, I think it's just, and I think she's obviously in the right place. She came to the meetup, she spoke with you, like
absolutely,
she's doing the right thing. So that's great. But that's the kind of stuff that I think that's common. I think there's a lot of people that probably aren't at the meetup, and they might hear this and they're like, there's no way I'll ever make 200,000. And it's like, well, no, not if you just refuse to believe you will or try. Like you are going to have to put some work into it unless you have a trust fund. But yeah, it's going to have to be, there's going to have to be some steps that you take to do it. But but it is doable, right? It is
Absolutely.
very possible.
Yeah. And it might take a while, but that's what's so amazing about the time we live in. Jason, just your podcast, right? It lets people know that it is achievable, gives people the resources, the knowledge. That's the same reason we do our podcast, is to introduce people to concepts, to resources, to individuals, to information, so that they not only believe that it's real, but also they can figure out how to make it real.
Yeah. Yeah. It's a really good point. I mean, at this point, you can't say the information is not available, because it's more accurate to say you can't escape it. It's literally everywhere. So using that to your advantage is really the key. So you started with single families and then went into syndicating. What's your strategy? I guess, what's your strategy at this point in terms of, where are you investing? What kind of asset classes and things?
Yeah. So we did our first syndication. We closed on our first deal in 2016 with my first partner, Jason. And if you read my book, you'll read and you're like, well, this is all about multifamily, which that was our primary focus starting out. I still love the demographics of multifamily. I know you know what I'm talking about. And it's really the book is about the value add strategy. So it's kind of like the Warren Buffett strategy of investing, or Benjamin Graham is probably more accurate. And, it's like Warren Buffett, it's kind of boring. It's not super sexy, but at the same time, there is something very appealing to me about buying a cash flow positive business. We just bought a local car wash here, for instance, cash flow positive. I'm bringing in my partner. We're going to make some upgrades to several different aspects of the business. We're going to increase the net operating income through an increase in revenue, decrease of expenses. We do the same thing that we do in multifamily. We do the same thing in self-storage. We also do the same thing in mobile home parks. And we're also syndicating car washes now as well. So really, it's the same value add strategy that can be applied to multiple asset classes in kind of these boring cash flow businesses that have predictable income. They have predictable entry and exit multiples within a degree, right? We know cap rates can go up and down, and multiples of EBITDA or NOI can go up and down, but within a range, you know that it's predictable. And then, just following, some simple rules and strategies, like having fairly low leverage, high operating reserves, so we can weather little storms that are going through things here or there, and also being diversified is another tenet that we follow as well.
Yeah, and it's all of those are actually really great, especially I think in this time that we're in, where things are a little bit uncertain. Being diversified, having those good operating reserves, I think is key, right? Because
absolutely,
people that are highly leveraged with no reserves are getting a little stuck right now. Not wishing negative things on people, but it's going to become opportunities for other people that are not over leveraged and have reserves. So it's something to keep in mind.
Yeah. Let me, if you don't mind, I want to kind of take this full circle a little bit. So we kind of touched very briefly on, some of the, bad practices that can happen in sports or business and those sorts of things. And, one of my favorite books is Anti-Fragile by Nassim Taleb. And he talks about how you don't want to get blown out, right? Like, you want to live to fight another day, essentially. And I think that if you're cheating, whether you're cheating in business, you're cheating in sports, or whatever it might be, that's not an anti-fragile. That is not a robust strategy, because if you get caught, you lose it all. You can't fight. You can't play the game the next day, right? So I think, there's a lot of wisdom if you look at that and you have that approach. So whether it's, you're applying it to your life, you're applying it to sports, your career, or investing, you need to have a robust strategy that's going to allow you to get up, to fight, to play, and continue to play that game. Because if you think about it, it's kind of like the old little cute story where you got two friends run away from a bear, and the one stops to put on shoes. His other friend says, "Hey, you're not going to outrun the bear." And he goes, "I'm going to outrun you." It's like, all you have to do is be able to fight the next day when somebody can't get up off the mat and fight. And you're going to be able to find those deals that other people can't find.
Yeah, absolutely. Call it preparedness, call it, sort of strategizing, but ultimately it's just putting yourself in a position to succeed, and, not
Absolutely.
kind of getting yourself sort of buried in speculation, I suppose.
Absolutely.
I read this in your bio, and I think it's actually a good thing to talk about, but infinite banking, something that
Yeah.
you're using as a strategy in your real estate investing. I think, as we talked about earlier, you have the person at the meetup that doesn't believe they can become accredited. I think infinite banking is something that people hear about and think, oh, that can't be me. I don't ever get to that level. The reality is that it can, but again, you have to believe it. So maybe just talk about that a little bit. And I think that'll be a good thing for the listeners to hear.
Yeah, there's a lot kind of underlying the infinite banking strategy, and we call our specific use of that strategy the investment optimizer. So if you kind of peel back the names and all that stuff, what it is, Jason, you probably know this, but it is the application of whole life insurance and using it in a fashion where you maximize the cash value inside these policies. Now, you have to remember that I'm a person who lost their father at age 5, so I acutely know the value of life insurance, and I also acutely know that the fact that I'm here today and I've outlived my father by over 3 years, there's something to that. So I know that there are realities in life, and I want to protect my family against those potential realities or downsides that can occur. So I really see the value of life insurance. If you don't need life insurance, the strategy is probably not for you. So I'll start off by saying that. But what the strategy does is, and if you're working with an agent that understands this, it basically pays for itself, or it's actually a positive return, especially if you have money sitting in a bank account in between deals. You can put that money to work in a life insurance policy, and it's going to pay for itself. But what you do is you maximize the cash value of these policies, and instead of letting the cash sit in a bank, once you start these policies, after about 24 months, every dollar you put in, you can pull back out dollar for dollar. So it takes about 2 years to do that. So once you get through that initial period, there's fees involved. You're paying for the insurance. So like you're exchanging something for that value that you get. But then we've been doing it for 13 years now, Jason. Every dollar we put in, it comes back out. We put it into an investment, and then it goes right back into these policies. So it grows the cash value inside the policies. It also we're able to deploy it into investments. We're never sitting on a pile of cash that's being eroded by inflation, because it's always inside our policies generating a return. I was just looking at my returns because the stock market's down. And I looked at the comparison. We outperformed the stock market by over 100 basis points. If you look at kind of pre-COVID to today. Now that's a snapshot. I'm not going to say that it's always going to be that way, but typically after tax returns inside of these policies, even if you don't do anything with them, is positive. But you kind of brought up a point. It's a lot like insurance. It's a lot like real estate. If you start these policies early, the premium's stable. It's flat. Just like if you buy a piece of real estate, your mortgage for 30 years is stable. It's flat. You pay it off. You pay these insurance policies off, essentially. They're fully paid for. Then you have access to that equity in your policies. So if you're listening and you understand real estate, you actually understand exactly how this strategy works. You take out a policy, you have a flat premium, you grow your equity in that policy over time, you pay it off fully, you pay off the expense fully, then you can access that equity just like you can access the equity in your home. You might be thinking, well, yeah, Chris, but I got to borrow the money out. You do, but the difference is, or the similarity is, even if you borrow money out of your home, that equity out of your home can still go up in value. It's the same thing. If you borrow money out of your insurance policy, the equity still goes up in value year after year. So we actually have a page dedicated to this on our website on the banking section. And in our course, I dedicate a whole module to it, because it's the application of it, Jason, that makes the most value. If you start these policies and you never use them, they're good. There's value inside of them. But if you start these policies, you know how to use them, and you multiply that value by also investing in cash flow real estate at the same time, it's breathtaking, the kind of value that you can create inside of these.
Yeah. And I think, just to sort of make sure this point is heard, is when you take out that money you borrow against the policy,
yeah,
the policy is growing based on like dividends and whatever that insurance company uses. So that growth continues, and it doesn't
right.
lessen. The growth that you have isn't lessened by taking that, borrowing against the policy. So I think it's an important thing that maybe
that's exactly
people
right. Just like a house. Yeah.
Right. It's like
yeah.
a little bit, I find a little bit hard to understand, but
yeah.
and it does take time. And same thing, I think using it as a house analogy is perfect, because it takes you time to build up equity in your house as well to be able to borrow against. It's the same thing on these policies. You're going to have the policy for a number of years before you're able to do this. But once you get to that point, you're essentially almost double dipping. You're getting the returns of the policy itself,
absolutely.
which aren't, those returns aren't huge, but if you then take that money and it's getting a little bit, and then you're using money that's getting a little bit to gain your, grow your real estate portfolio, well, now you're essentially doubly growing those returns.
Yeah, exactly. And then the thing is, it's like if you have a couple $100,000 of cash sitting in a bank account that you're using for your emergency fund, your cash cushion, or your investment fund, you can put that money to work. So a lot of people, what they find is they're like, oh, well, I kind of have most of the cash I need to set something like this up. And, you made a comment. It's like, well, if you start this policy, you might have to, contribute to it for a while, but also it's a way to start these policies. There is a way to start these policies where you can actually put money in and get cash back out in a month.
Yep.
So yeah. And there's a lot of different options. Again, we could talk about that for multiple shows as we have on our podcast as well.
No. And that's a great point, that there are ways around that time in the policy. There are ways to make it happen quickly. You have to have the money, but yes, there are ways to make it happen quicker than years. But it's something that I think, having people know that it's out there, and then finding, the appropriate agent to help you set that type of policy up is really the most important thing.
I'll underscore kind of the first thing I said, Jason, real quick, which is it is a strategy, but really it's a tool. A lot of people say, oh, it's this investment. I can beat this investment doing other stuff. I don't really look at it like an investment. I look at it like a tool. And if you look at it like a tool, you can assess the cost to utilize that tool. Because if you look at it like an investment, you also have to look at the insurance component like an investment. And my best friend's wife died 3 years into the policies that he started, these specific policies. You probably don't want to ask somebody like that, hey, what was your return on your wife's death when that happened?
Right.
Because it's not, again, and if you wouldn't ask that question, then you shouldn't say, oh, let's look at this like an investment. It's just not that.
Right. Yeah. I mean, we're sort of skimming over some of the other components of these policies. Obviously, there's a death benefit. There's
absolutely
the cash value. I had one of these policies before I knew I could use it to invest in real estate, but basically the way that they sort of
me too
sold the way they sort of sold it to me was like, as a retirement policy, you can take that cash value and you can, that's still true. Like you can take that cash value out at some point against the policy. And so the money you've put in, you're essentially taking it in as income. So it's there's a lot of it is a tool, as you said, and it can be a pretty powerful tool if you can figure out how to use it right. And yeah, the idea of the your friend's wife, like it's a touchy subject too. I had the same, because my broker was like, well, do you want to get policies for your kids? And I was like, the idea of profiting somehow if my kids were to die, like, no thank you. And so I've had to I still really struggle with that part of it. Is just like, do we get them for our kids to use as the tool? Not because I want, I don't want money. I don't want to even think about, that sort of type of tragedy, but it is something that it's probably hard for people to, sometimes come to grips with the emotional component of it, in that it is associated potentially with someone dying.
No, it is. And that's the reality. And it's probably because of what I've been through. It's a little bit easier for me to kind of acknowledge that reality and know that it may be there. But again, it is kind of weird when you look at it and you say, well, let's see, because you can actually calculate what the return would be based on the year that you die. And that's really weird to do, I think.
Right.
So, it's certainly not something a lot of people want to do.
They give you exactly, like, they give you this piece of paper that tells you, like, literally, I can look at my policy and say, what is the best year for me to die for my family? Like, I can look right at it and say, okay, this is where you get the most money in this year of
don't show your wife that piece of paper.
Exactly. It's kind of a scary thing, because they do put it in, and I frankly, again, I don't want to see that on my kids. Like, I don't want to see it written out on a piece of paper. Like, if my kids die at this particular age, like, it's just, so it is a bit of a scary thing, and you have to, put it in that part in the back of your mind, and use it as the tool that it can be. So I think that's
Absolutely.
I think that's probably why infinite banking sounds a lot nicer than like, how is my life insurance policy going to be used as a, for an investment tool.
Sure.
But yeah, but it is a powerful tool, and if people want to
Yeah.
go, look into it, they should. um Chris, let me switch gears here so I get the chance
Yeah.
to ask you all the questions that I like to ask each guest. The first one is based on the name of the show being Know Your Why, and so I always ask each guest, what is your why? What motivates you and drives you towards success?
Yeah. So today it's my two boys. They're soon to be 11 and 13. So actually probably 11 when, cause just in a couple weeks here. So when the show comes out, my
Birthday
youngest, and
coming up.
yeah, absolutely. Poor little guy. He's right around Christmas, but we make it special for him. So yeah, I mean, again, kind of touching on that same subject. I didn't get to know my father, so having the ability to spend the time with my children, and especially at this age, which if you're listening and you have kids that are kind of in that age, they're old enough where you can hang out with them, you can have fun with them, you can do stuff with them. We got a ski trip planned here in a couple of weeks, which I'm really excited about. So my day to day, my why is certainly my boys, my family, my wife. But from a larger perspective, Jason, I think what I came to realize was once I was financially independent, I got to live life on my own terms. I became a better person because I got to make choices from a more idealistic perspective. And I think that if you have that ability, if you can wake up every day and do what you're truly meant to do and what you enjoy doing, most people, again, there's some people that are going to use their powers for ill, if you will, but most people are going to live a better life, and you're going to be able to impact more people. So my goal is to impact as many people as possible, empower them with that knowledge so that they can ultimately live their best lives.
Fantastic. Tell us something about yourself, Chris, that it isn't common knowledge. Special skill, a hobby. I know you were a cyclist, so maybe you have something else that you've picked up in the meantime.
Yeah. Well, I don't know it. So you guys know about me being a cyclist, but I think a lot of people, if they listen to, kind of what I teach and what I talk about on a day-to-day basis, people are like, yeah, Chris is a capitalist. Like, he's into money. I'm also an environmentalist. Love the environment, love spending time outside. Cycling is a wonderful way to, get out into nature and really explore it, enjoy it. I rafted the Grand Canyon. I did 3 weeks. This is one of my favorite areas back here behind me in that picture.
Cool.
One of the places we camped called Tor Weep. Granaries are overlooking that specific picture. Yeah, I got my church to start recycling when I was 12 years old, so very early on. So yeah, people kind of laugh. They're like, some people here in Asheville call me a conservative, and then some of my friends that are more conservative call me a hippie. So I kind of like, I kind of like it that way. I like kind of
live on
make
that
people
line.
guess a little bit.
Yeah,
That's right,
the
exactly.
conservative hippie. That can be your new
There we go. I'm
tagline.
the conservative hippie. Yeah, there we go. Hashtag conservative hippie. Put that in the show notes.
There you go. Yeah, I mean, in Asheville, it doesn't make sense to live in Asheville if you're not into the outdoors, and that kind of, it's a beautiful area.
It's a wonderful place to enjoy it for sure.
When people hear this, Chris, and they want to reach out to you, what's the best way? And we'll put whatever you want in the show notes.
Yeah. So our website, super easy, nextlevelincome.com. You can check out our podcast, get a free copy of our book. And Jason, you can't get this yet on the website, but we have our course coming out here in just a couple of weeks. And I'm going to send you a link here, and what you can do to get special early access to that course. Also, you're going to get $500 off the course. You can use code Jason, Jason, and I'll give you the link to do that. And that course is going to walk through tips to help you make more money, tax strategies, insurance strategies, estate planning strategies to keep more money. And then we're also going to walk you through active and passive options to grow your money. And we're also launching our new deal analyzer spreadsheet. So you can go through, you can take all the qualitative metrics to analyze syndicators, operators that are out there, put them in a quantitative metric. And then it's also going to spit out how many years until you're financially independent. So that's all included in the course. Again, you can use the link in the show notes here and code Jason, capital Jason, and you're going to get $500 off that course.
Awesome. Thank you. I'm sure people will really appreciate that.
Yeah.
We'll certainly put that in the show notes. Last question for you. What is a piece of advice you would give to someone who is looking to get started in real estate, want to get going, and they're maybe a little bit stuck. And I guess we sort of touched on some of this with the woman from your meetup, but kind of what would you tell someone who's listening to this and they say, yeah, you know what, I think I want to get into this.
Yeah. So first off, look at all the options that are out there, figure out, okay, am I kind of handy? Do I like to do fixer uppers? Is that something that I'm interested in? Maybe I buy a house and I fix it up myself and I flip it within 2 years and I double my money tax free because I use the $250,000 tax exemption with your own property. Maybe you're listening to Jason's show and you want to invest with him or do a syndication. And you say, okay, that's my strategy because I enjoy what I do. I'm really good at doing that. I want to make some more money and do that. But pick something that makes sense for you. Find somebody who's already done it and or is doing it, and then reach out to them, work with them, and then move forward. And what's going to happen? It's not going to feel perfect right away, most likely. It's like that first date. You're a little nervous. You're like, I don't know, is this the right person? Is this not the right person? Do I want to go on another date? Do I not want to go on another date? You get married, it's still challenging. I've been with my wife for, 21 years now. So it's been, over 2
Hopefully
decades.
You got that right. We'll have to edit it.
That's right. Yeah. I had to do the math real quick, but it still takes work, right? There's days that I'm sure she's like, I don't know if Chris is the right guy for me today. Because it takes work, right? It takes work to do that. So my point is, even when you make that first step, you're going to have to do it with a little bit of faith. And then you're going to have to keep learning. When I wired that first $50,000, it was super nerve wracking. And I kept learning more about the investments, listened to all the calls and, read all the reports and had my wife do it. So again, learn, choose a strategy, find somebody to do it with and take that action, and then repeat, keep learning about it, keep generating more capital and keep doing it. And what's going to happen, that flywheel that you generate, it might start off kind of slow, but in 5, 10, 20 years, it's going to be so big. You will bring change not only to your life, but to the lives of those that come after you and your other generations.
Yeah, 100% agree. 100% agree. It's going to feel really slow in the beginning, but once you get that momentum, it really does pick up fast. It's that power of compounding, that the way that curve worked that you mentioned in the beginning, it really is kind of amazing. Well, Chris, thank you so much. Thank you for coming on the show today. I appreciate everything. I appreciate all that you've shared. It's been an awesome conversation.
Yeah. Thank you, Jason. Appreciate the opportunity. Thank you so much.
Yeah. And everyone listening, if you like this episode, please like, rate, and review. That way we can get it out to more people. Thank you.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.